Hi, welcome to First Draft Live. It's Friday, August 22nd. I'm Mark Bonner, Business Editor-in-Chief, coming to you live from New York. Thank you to everyone for tuning in. Today's episode of First Draft Live is presented by Agora. Whether you're managing deals, raising capital, or growing your portfolio, Agora is your trusted platform for seamless real estate investment management. Visit agorareal.com to learn more. That's Agora, REAL.com. Okay, today we're stepping into the eye of the storm in commercial real estate finance. More than $23 billion in CMBS loans have passed maturity without resolution. AAA bonds have taken losses for the first time since the financial crisis. Yet, new issuance is booming. Nearly $60 billion in the first half of 2025 alone. That is the busiest start since 2007. Investors are flocking to single asset deals. Conduits are shrinking. Office is even creeping back into favor. So, which is it? A market on the brink or one evolving into something stronger? Our guest today knows this world better than anyone. He's credited as the creator of the CMBS market in the 1990s, and now he's aiming to remake another system he calls broken: California politics. Ethan Penner is the CEO of Mosaic Real Estate Investors. He's chairman of Rev and Office REIT, an independent candidate for the governor of California, with policy ideas on CEQA, homelessness, affordability, and wildfire prevention that could reshape the state's real estate future. Before we get going, send your questions in the chat. We'll get to as many as we can. Ethan, welcome to the show. Appreciate you being here.
Thank you, Mark. It's a pleasure to be here with you.
Look, before we get into CMBS, let's talk about this speech that Jerome Powell just delivered in Jackson Hole, Wyoming this morning. The market was hoping that he would give a clear green light for interest rates, but instead he gave a little bit of a warning shot. I'm quoting him here. The chairman said, the baseline outlook and the shifting balance of risk may warrant adjusting our policy. That seems to be a clear hint to relief next month for the next FOMC meeting. The markets are reacting positively. Right now, we're hovering around 900-point gain on the Dow. But he said decisions, quote, will be based solely on their assessment of data and its implication for the economic outlook and the balance of risk. Clearly, a rejection of President Donald Trump's push to slash rates for his own political gain. His overall tone was a little murky. The bottom line, Ethan, is that his outlook for the US economy is not looking good. Yet we're seeing what the Dow is doing this morning. What do you make of it?
Well, I think we always get mixed messages. I would say that Mark, his comments today absolutely foreshadow interest rate cuts over the coming periods. He's starting to set up the argument for that, and he's making sure that people understand that the argument is not political, the argument is economic. And I think that is very important. I think that people have to believe, we, for better or worse, the Fed is the Fed. It is what it is. I think that there's arguments to be made that it's for better, and there are arguments to be made that it's for the worse, but it is what it is. It's an animal that exists ideally apart from the political machinery of our nation. And I think that's part of its important value proposition. And I think he's resisted the pressures from our president. And I think he doesn't want to seem as though when he does cut rates, that it's because of the president. And I think that's important. So he's setting up the arguments, and you could see it. And I think that that portends lower rates going forward. I think, in fact, had the president not publicly pressured him over the last few months, we would have already seen cuts in interest rates. I think that he was fighting two fights. He was fighting the fight to actually do what he believes his job is as the Fed chairman with regards to the economy, and he was also doing his job as the Fed chairman to ensure that the world sees the Fed continuing to be an entity independent of political pressure.
Assuming we get to mid-September and the Fed lowers rates by 50 basis points, that doesn't seem like a lot in the grand scheme of things in the last 5 or 6 years when we were at near zero. How big of a difference do you think that's going to make for the commercial real estate market?
I don't think the Fed fund rate is going to matter at all, to tell you the truth. I don't think that's the story. I think that the only thing that will matter is monetary policy as pertains to quantitative easing. I think that uh, if we believe and if our Fed believes that the economy is in tough spots, what we've learned over the last 17 years is that quantitative easing, the injection of capital, of new money into our system, Fed buying of bonds and expanding its balance sheet, that actually works. I think that managing the overnight borrowing rate to banks won't matter at all.
Okay. Let's move into the CMBS conversation. So, as we just discussed, more than $23 billion in CMBS loans have blown past maturity without resolution. Assets are frozen in place, valuations are unclear, and workouts are kind of slow to materialize. KBRA says delinquencies just hit 7.5% in July, with over 10% of loans either delinquent or in special servicing. Are these maturity extensions just kicking the can, or does this represent the early stages of a reset?
Well, I think that look, you got to go, you brought me here. Obviously, I go back to the very, very beginning of the creation of securitization. And the word securitization kind of needs to be described here, perhaps better, which is really just the introduction of an illiquid asset class called real estate and real estate loans to the liquid market of trading bonds minute by minute, right? And so you have this weird marriage of illiquid into liquid, or kind of like
Hmm.
an alchemy that happened, right? And it's a very unnatural and uncomfortable combination. It was done for existential reasons back in the early 90s because the lenders, the traditional lenders had abandoned the market, and accessing the bond market for capital was what saved the market. But but you have to understand it's a naturally kind of weird combination of naturally illiquid assets that are clunky in a bond structure that trades minute by minute and has price discovery. And I think that that's going to create these kinds of questions forever. Like, gee, is the pricing right? What's going on? Because historically, with illiquid assets, and illiquid also means poor price discovery, you have slow moving prices, you have
Hmm.
arguments, and you have concealment, and you have the let's wait and see what happens approach to slow moving price discovery assets like real estate. But then, of course, now you've turned it into a fast-moving price discovery asset, which is the securitization form, whether it be REIT stocks and equity or CMBS and debt. And they're going to kind of tell different stories at different times. The thing that's interesting, that kind of I would say throughout all the questions that you want to cover today, is that CMBS and price discovery of kind of a securitized version of an illiquid asset, it's not that it's wrong or right. It's just that it is. And I think that that's the cool part of it. It's that it's always there, and that's the true value proposition of accessing the capital markets, unlike the um, traditional regulated markets. The regulated lender markets are not always there, and they move in lockstep. So, the response, the creation of CMBS was in response to a kind of across the board abandonment by kind of regulatory edict of this asset class, which was obviously extremely unhealthy for this asset class and everybody in it. Securitization allowed for everyday money to be there, just different prices.
But I mean, that's the macro. But getting into the moment we're in now,
Yeah.
Ethan, again, are we kicking the can on these maturity extensions, or are we
Well, there's
going
no
through a
question.
reset?
There's a natural kick the can that is part of every kind of clunky asset class like real estate. And we can call it whatever we want to call it, praying for a better future, lying to our investors. There's a whole lot of ways to characterize what's going on and what always goes on in market downturns. And then, I think there's a lot of hopeful, wishful thinking because there are a lot of people have made investments that jobs are on the line and performance is on the line and real losses are on the line. And I think that, people say it's not a realized loss until you sell. And the mark to market sometimes compels sales. And so there's arguments about concealment of truth one way or other. I grew up on a bond trading floor. And so for me, Concealment of truth meant you get escorted out of the building immediately, and maybe you find yourself defending against a criminal prosecution. So I'm not very a big fan of concealment of the truth, and there is clearly a concealment of the truth going on today.
What is that truth?
Well, the truth is that there's massive, massive losses in real estate, and they're leaking out now. I mean, you probably saw the news recently on Worldwide Plaza in New York, and how that asset has lost, I don't know, 80% of its value. It's lost, just one asset, and
Mhm.
um, I think there was another one on Lexington that was announced recently that lost 85% of its value, and I'm talking about in the last 4 or 5 years, and so. These are breathtaking losses, and I think that clearly the system hasn't recognized that on any level, and I think is afraid that there's existential issues for many investors and even companies were those losses to be realized. And so this is not a this is a big deal, right? This is a very, very big deal, and it cuts to rippling through the economy that Chairman Powell spoke about today. The losses in commercial real estate are so big that the rippling effect of those losses through the economy, once
Yeah.
felt, could actually be very, very harmful and show up in the national economy.
Sure. And you talk about the ripple effects. For the first time since the great financial crisis, AAA tranches have taken losses. The layer investors once assumed that was untouchable. That shakes faith in securitization at its core.
Mhm.
What does it mean when even AAA is no longer sacred, in your view, Ethan?
Well, Mark, one of the things I've noticed since the early 1990s is how a AAA from one vintage is not the same as a AAA from another vintage. And unfortunately, uh, lenders get lax in bull markets with their underwriting standards, and rating agencies are really just proxy lenders. And they also get lax in bull markets, and they have a history of loosening their standards. So a AAA in one part of a cycle is actually not the same bond with the same protections as a AAA from another part of a cycle. And I remember most profoundly when the kind of financial crisis happened in 2008 in the wake of a very lax underwriting cycle, which always happens. And so 2005, 6, 7, you saw a continued decline in credit standards applied by the whole market, including the rating agencies. And AAA bonds and AA bonds and whatever else you want to call them from that period were underwritten to a different standard than the same rating from the prior standard. And when they collapsed, they collapsed. But then in 2009, there was new issuance. And guess what? The rating agencies learned their lesson and became chaste and started
Hmm.
underwrite like the rest of the market ultra conservatively. And I was running a fund at the time, and I couldn't buy B pieces fast enough in 2009 because you're buying from the most tight standards of all time. So when you're an investor in a market, it's incumbent upon you to understand these things. I don't feel bad for people who bought AAAs and are going to lose money. I think that they need to understand their market. They need to understand that a AAA that's underwritten in a lax underwriting standard is not really the same as a AAA that's going to be underwritten today or tomorrow in a time when people or rating agencies and lenders are much tighter.
So it sounds like you think that the moment we're in here is just simply the cycle running its course. It's not a
100%.
pricing problem. It's not a structural flaw in your view.
No, no. Well, there are structural flaws in CMBS that have been there since the beginning, and that has to do with the incentives of this and the controls associated with troubled loans with a special servicer, and whose interest they are supposed to be acting in the best interest of, and whose interests
Yeah.
are prioritized. That's a different conversation, but I think the trading, the pricing, the price discovery, the beauty of it is it's there in the market. Go trade them. You know what I mean? That's fine. I think that mistakes get made. That's part of people living their lives, which
Yeah.
includes buying securities.
And to complicate matters even further, and issuance is booming. Trepp reports nearly $60 billion in the first half of 2025, the biggest first half since
Mhm.
2007. Is this resilience? Is this
Well,
denial? What do you make
if
of
I
this,
was,
Ethan?
look, I think that there are smart, experienced investors in every field, and I would bet the smart, experienced investors in CMBS, and I'm not an active CMBS investor, but if I was managing a CMBS fund, I would have not been loading up the boat on the vintages that were misunderwritten by the market,
Hmm.
including the rating agencies. And I would be ready to load up the boat right now because corrections, the pendulum doesn't stop in the middle. So when it swings to the other side. And this is probably going to be a very good time to buy.
If you're just tuning in, this episode of First Draft Live is presented by Agora. We're here with Ethan Penner, the creator of the CMBS market, CEO of Mosaic Real Estate Investors, and now an independent candidate for governor of California. Let's talk politics, Ethan. Your career has been about rebuilding broken systems, from creating CMBS out of a collapsed real estate finance market to now running for governor. You've called California politics just as broken as CRE finance was in the early 90s. Tell me, how did your outsider track record in finance? How does your outsider track record in finance shape the way you might govern the state of California?
Well, I'm a systems person, right? I look at systems. I try to find kind of where they're working and where they're not working. As a trader, take advantage of where they're not working and as a repairer or fixer, try to find opportunities where my skills can be of value in repairing. I did that in commercial real estate. I really came to commercial real estate in the early 90s as a complete outsider from structured finance. And I come to politics from an operational standpoint as an outsider, but we all live with politics. The idea that none of us have political experience means we're not living in society. Political experience is living in society. When we are citizens and we experience society, we are involved in politics. We know where the rubber and the road are meeting because we're in it. So the idea that we're completely inexperienced is silly. I think that I don't know where the toilets are in the State House. That makes me an outsider. But I do know that, our systems are broken on every level, and they desperately need an outsider to bring healing to them. Albert Einstein said, "The people who break things are never the people who you turn to fix them," and I think
Sure.
that's true.
California is one of the strongest economies on the planet.
Well, it's
What's
no, it's
broken?
actually one of the biggest economies. I would say it's not one of the strongest economies. So we have, for example,
Semantics. I mean, it's
no,
gigantic
no,
on the
no,
global stage,
it's much
Ethan.
more than that. It depends on when you say about economy, there's headline numbers, and then there's kind of, again, rubber meets the road number. So the headline number is the GDP number, right? 4.2 trillion in GDP makes us by far the largest state, and in fact would be the fourth largest country were we to be our own country. So that's very, very impressive. But what's shocking is that we're actually 50th out of 50 states in a number of really bad things. We're the 50th state when it comes to unemployment. We're the 50th state when it comes to people living at or near the poverty line, both on a percentage and an absolute basis. We're 50th out of 50 state in homelessness. We're 50th out of 50 in affordability, housing affordability. So the economy is not working for many, many, many people. Um, it's big for sure, and I think that gives a competent leader and a competent team of leaders an opportunity to turn it around reasonably quickly, but it's definitely failing right now. So that's the appeal for me. It's a big, monstrous economy that just needs professional management. We don't have that today, and we haven't had that for quite a long time in California.
You've said, quote, delete CEQA and even the Coastal Commission. What
Mhm.
does that mean for housing and development timelines?
Well, that's a big part of it. So I think that we have a couple of policies set up in our state that repels ambition, repels drive, repels development of real estate or companies and growth of companies. I would say that there are three problems. One is our tax structure. Two is our bureaucracy and the compliance and processes. And those are really big deals. And the third one is not as important as the first two, but the legal process. We have a tort problem in our country, in our state. And so you've got three big repellents, and that those things have driven, as everyone knows, driven business and
Yep.
driven taxpayers out. In fact, by the way, I didn't mention this, but the other worst thing that we're 50th in is we're 50th, and we've been each of the last 5 years in net migration, which means that citizens are choosing to move to any state but California. Now, when anyone who's been in California knows that's astounding because people are choosing North Dakota over California. That's how bad things have gotten, how unpleasant the quality of life and how difficult it's been to build businesses here. So when I say delete CEQA, or delete the Coastal Commission. What's interesting is that both of those were programs that were introduced as temporary programs. So deleting them is actually consistent with their original construct. The fact that they're still around is the problem. The fact that they were not intended when they were brought about to be permanent programs. So deleting them is just going back to the original intention of both of those programs. And when you look at the kind of we are the most I think the most beautiful state naturally. It's kind of why I've chosen to live here and make my life here. I love nature. And in this zeal to protect our nature, which I think is fine, it's consistent with how important it is to our state, we've over regulated. We've created I think by my last count, 19 different organizations that are environmental compliance related organizations that a developer would have to deal with in order to get an apartment building built. It's like if I said to you, Mark, let's go on a trip. And I said, but we have to go through the TSA checking process. And you'd say, okay, that's not a problem. What if I told you that going to LaGuardia involved going through 19 consecutive TSA checks? It might deter you to actually make the trip, right? And that's what's going on here in California is the processes to get something built are
Yeah.
long, arduous, costly, and irrational, and it's a deterrent, and that has translated into a whole lot of problems, including affordability. So, because we don't have enough homes, we have roughly the same amount of homes as we did when we were a 20 million person population. We're now 40 million. So just anyone who knows anything about supply and demand can infer that that's going to create price inflation, serious price
Yeah.
inflation.
Shortly after you announced your candidacy, BizNow reported your proposal to build new towns for the homelessness in rural California. How do you respond to critics who see that as as segregation rather than a real solution to that issue?
Okay, well, 0.4% of our population is homeless. By the way, we have the largest homeless population, as I said before, of any state by far in the country. So, but 0.4% of our population is homeless. 99.6% of us that are not homeless are very kind. We pay for the livelihoods of that 0.4%. And we pay a lot of money, but we pay it in a very inefficient way. And I believe that the end outcome of our generosity, of supporting the lives of these 187,000 humans, which is phenomenal. I'm so proud to be a Californian that we are in a state where we care about our weakest people, our most vulnerable people. I think that's a very important hallmark of a great society. Unfortunately, our kindness is going not only to naught, but it's being preyed upon by people. So there's an industry that makes money keeping people homeless, believe it or not. And there's a lot of people who make money keeping people homeless. There is nothing kind about sleeping on the pavement. And if you doubt that, go lay down on the pavement for half an hour and tell me how that feels. And can you imagine living on the pavement, okay? Which is what we have. That's what homeless is. So my solution is actually the most kind. It's the first kind solution, which is let's build proper housing for people. Let's take the generosity of the 99.6% of Californians and let's actually put it to good use. Let's build proper housing, which we could have done, by the way, already for all the money that we've
But Ethan, how
squandered.
does that integrate those people back into society?
Well,
If
because
you're shipping them out to a rural
well,
part
hold on,
of the
Mark.
state,
Yeah,
it
the
just
answer is
doesn't.
very clear. No, no, the answer is very clear. They can't be integrated off the pavement. There's no pathway from the pavement to a functional place in society. But if they had a proper house, if they had a place to sleep and gather themselves, take a shower, and then also if they were segregated from each other based on their unique problems, right? Some of them are economically off the wagon. They've lost their way. They should not be commingled with people who are have mental illness or have drug addiction problems. Each of these groups deserve and need to be counseled in a way that will enhance the best possibility of them returning to a productive, functional, fulfilling life. The way it's set up right now is absolutely a deterrent for that. So, what I would do is create separate housing based on their unique problems, have counseling for their unique problems, and create pathways for them back into society. But that's got to come from a bed and a shower and proper treatment. It's not coming from the pavement, believe me.
Look, there are any number of advocacy groups in California that are dedicated to trying to help the homeless. What do they make of this
There are
idea?
hundreds of these
Hundreds, if not
organizations.
thousands. What do they make of this idea that
Well,
we're going
they're
to
going to hate
scoop
it.
up people off the street and
They're
bring
going to
them
hate.
to
They're
some
going to hate
place
it.
in the middle of
Yeah.
California and
Well, let
away
me just tell
from.
you. Yeah, the hundreds or thousands of
I
those
just
are.
want to get into the logistics,
Yeah,
Ethan,
no, they're
because
going to.
I don't. I think there's a lot of miscommunication out there
Yeah.
about what this plan
Well, first of
actually
all,
is, and I'd like you to explain it.
right, the hundreds or thousands of those organizations that are feeding off of this problem and have done nothing for the homeless, with all the money that's been directed to them and by them, the homeless population has grown by 25% in the last 4 years. So they've done nothing. And you know what? The only people who have done okay is the people in those organizations who get paid. So there's livelihoods being made off the backs of these people sleeping on the pavement. They're going to hate my idea because my idea is going to work and will put them out of business. So, unfortunately, self-interest is at work here, as it always is in human nature. And these people need better jobs than preying upon making a living because it perpetuates homelessness and perpetuates people sleeping on pavement. That's just not going to, it's not going to persist in my administration. So I will fix homelessness. I will do everything in my power because it's the kind thing to do.
Okay. I'm getting the hook from my producer, Ethan. I apologize, but that's all the time we have today. I just want to remind our audience that Ethan Penner is the author of Greatness is a Choice and Awareness and Prayer. You can learn more about his campaign at pennerforgovernor.com. Ethan, thank you so much for joining us.
Thanks, Mark. It's a pleasure to be with you.
And a big thank you to Agora for presenting another episode of First Draft Live. We're off next week, but we'll be back after Labor Day with another conversation at the intersection of real estate capital and public policy. So don't miss out. You can sign up now on our event page. You can also catch today's episode and every past conversation on your favorite podcast app. This is First Draft Live. Have a great weekend, y'all.